Wall Street loves to celebrate great earnings. And once again, ServiceNow delivered. Revenue beat expectations. Subscription revenue kept accelerating. AI demand reached another major milestone. Management even raised its full-year outlook. So why does it still feel like the market isn't fully convinced? Because this quarter was never the real story. The real story is that ServiceNow has entered the most important battle in its history. Not a battle for higher revenue. Not a battle for another earnings beat. But a battle to become the operating system of the AI-powered enterprise. Standing in its way are some of the biggest names in technology: Microsoft, Salesforce, Oracle, Google, and a new generation of AI companies racing toward the same opportunity. The next decade may not be decided by who builds the smartest AI. It may be decided by who controls how AI actually works inside the world's largest businesses. And that's why, after another outstanding quarter, the real battle is just beginning. If you only looked at the headline numbers, this quarter was exceptional. Revenue continued to grow at a healthy pace. Subscription revenue remained strong. AI products gained even more traction. And management raised its full-year guidance once again. But none of those numbers explain why ServiceNow matters over the next decade. Because this company is no longer trying to be just another enterprise software provider. Its ambition is much bigger. ServiceNow wants to become the platform that connects people, workflows, data, and AI agents across an entire enterprise. In other words, it's no longer selling software. It's building the infrastructure that allows AI to operate safely, efficiently, and at scale inside the world's largest organizations. That's a much bigger opportunity, and a much bigger challenge. The clearest message from this quarter wasn't revenue. It was adoption. According to management, ServiceNow's AI business has now surpassed $1 billion in annual contract value, a milestone that signals enterprise AI is moving beyond the pilot phase. Companies are no longer asking, should we use AI? They're asking, how fast can we deploy it across the business? From IT and customer service to HR, finance, and operations, AI is becoming part of everyday workflows. And that's exactly where ServiceNow has an advantage. Its AI isn't built to replace employees. It's designed to work inside the workflows companies already rely on. The faster enterprises adopt AI, the more valuable that platform could become. Because in the enterprise world, AI is only useful when it actually gets work done. Strong companies don't just add more customers. They attract bigger ones. And that's exactly what happened this quarter. ServiceNow continued to expand its relationships with the world's largest enterprises, signing more high-value contracts and growing its large customer base. Even more important, the company's current remaining performance obligations, or CRPO, continued to grow strongly. Why does that matter? Because CRPO represents revenue that is already committed but has not yet been recognized. In other words, it provides a glimpse into future growth. When both large deals and backlog continue to expand, it suggests customers aren't simply buying another software license. They're making long-term commitments to the platform. And in enterprise software, that's often one of the strongest signals of durable growth. So if the business is performing this well, why isn't everyone bullish? Because Wall Street is asking a much bigger question. What if AI doesn't just improve enterprise software? What if it replaces it? With AI agents becoming more capable every month, some investors believe companies may no longer need as many traditional SaaS platforms. Instead of logging into multiple applications, employees could simply ask an AI assistant to complete the task. If that happens, where does ServiceNow fit? That's the fear weighing on the entire software industry. But according to ServiceNow's management, that fear is based on one critical misunderstanding. And that misunderstanding could determine who wins, and who loses, the next decade of enterprise AI. ServiceNow's management doesn't believe AI will replace enterprise software. They believe AI will make enterprise platforms even more essential. Here's why. An AI agent can generate answers. But it cannot run a global business on its own. Every action must follow company policies, security rules, compliance requirements, and approval workflows. Someone has to coordinate thousands of AI agents, connect them to enterprise data, monitor their decisions, and ensure they operate safely. That's exactly the role ServiceNow wants to play. As CEO Bill McDermott explained, the future isn't about having more AI. It's about orchestrating AI across the entire enterprise. If that vision proves correct, then ServiceNow isn't being disrupted by AI. It could become one of the biggest beneficiaries of the AI era. Deploying AI is easy. Deploying AI safely is something entirely different. Large enterprises don't just ask whether an AI agent is intelligent. They ask whether it's secure, compliant, and trustworthy. Can it access sensitive data? Can every decision be audited? Can it be stopped before making a costly mistake? These are the questions that keep CIOs and CEOs awake at night. That's why ServiceNow is investing heavily in AI governance, giving companies the ability to monitor, control, and coordinate AI agents across the enterprise. In the age of enterprise AI, intelligence alone isn't enough. Trust becomes the real competitive advantage. And if ServiceNow becomes the platform companies trust to govern AI at scale, its opportunity could be far larger than selling software licenses alone. But none of this guarantees that ServiceNow will win. In fact, the competition has never been tougher. Microsoft is embedding AI across its enterprise ecosystem. Salesforce is pushing Agentforce to automate customer workflows. Oracle is integrating AI into its cloud applications. Google, Amazon, and OpenAI are all racing to become part of the enterprise AI stack. This isn't a battle for one product. It's a battle to become the platform enterprises depend on every single day. The company that controls enterprise workflows could eventually control how AI creates value across the organization. That's why this market is attracting some of the biggest technology companies in the world. And that's exactly why ServiceNow's greatest challenge is still ahead. The good news is that the market opportunity keeps getting bigger. As enterprises accelerate their AI investments, the demand for workflow automation, orchestration, and governance is expected to grow for years. That creates a powerful runway for ServiceNow. But there's another side to the story. Great companies often come with great expectations. Investors aren't simply expecting ServiceNow to grow. They're expecting it to lead the next generation of enterprise AI. That means every quarter will be closely scrutinized. Customer growth. AI adoption. Large enterprise deals. Profitability. Execution has to remain exceptional. Because when expectations are this high, being good is no longer enough. ServiceNow doesn't just have to outperform its competitors. It has to keep proving that it deserves to be one of the defining AI platforms of the next decade. This quarter proved one thing. ServiceNow's business remains exceptionally strong. But the next decade won't be decided by one earnings report. It will be decided by whether ServiceNow can become the operating system of the AI enterprise. If management is right, every new AI agent will need orchestration. Every workflow will need governance. And every enterprise will need a trusted platform to connect it all together. But if competitors build a better ecosystem, today's leadership could quickly disappear. That's why investors shouldn't focus only on next quarter's revenue. The real question is much bigger. Can ServiceNow become the infrastructure layer that powers enterprise AI for years to come? Because if that's the future, then this quarter wasn't the finish line. It was the starting line. The real battle is just beginning. As always, this video is not financial advice. Please do your own research before making any investment decisions. Thank you for watching. If you found this analysis helpful, don't forget to like, subscribe, and I'll see you in the next equity research.